Good afternoon and welcome to the Cannabis World Congress and Business Expo live stream, where we bring you the latest and greatest from the industry every week at 4 p.m. and have you on your way by 4:20. I'm Gretchen Gailey, the Chief Strategy Officer for CWCBE. And today we have with us Michael Harlow of the CohnReznick accounting firm, who can tell you everything and anything you ever wanted to know about cannabis and taxes. Michael, how are you doing?
And I'm excellent. I'm so excited to be here with you today. This is about as excited as I get, and I'm really pumped. So thank you for giving this opportunity to be here with you. Yeah, let's talk about it.
Well,
What's going on?
well, coming off of Red Man last week, I think we're ready for this level of excitement.
Yeah. So your
Um,
viewers this week, they drew the short straw, or did you not tell them about me?
no, there is nothing sexier than cannabis taxes. People cannot wait to learn more. So I've known you for quite a while. CohnReznick has been in this game, I think, a lot longer than most people know. Can you tell me what kind of changes you've been seeing in cannabis taxes over the years?
Yeah, I think it's fair to say that it's a difficult environment right now, and you know, 6, 7 years ago when we first got into the space with the advent of a lot of the licenses on the East Coast states, people were just excited. Like cannabis was exciting. You go to MJ Biz, you go to CWCB, you go to anything. Like people were pumped, and that's not really the case right now on a national level. There's still a lot of excitement about New York. There's excitement about Maryland converting to adult use July 1. Like there's a lot of positive things happening in the individual state markets, but the news that you hear at the national level is not so exciting. It's really, really difficult to raise capital right now. Um, Probably 6, 7 years ago, people thought generally when we were structuring deals, we were structuring them with the anticipation that 280E would go away sometime in the next 5 years, and that hasn't happened. And I don't personally think we're any closer to 280E being repealed or having any other legislative fix now than I did, I don't know, 2 or 3 years ago.
So
So
before I'm in danger of losing all of my viewers, you're telling me you don't have a unicorn to fix 280 in your back
no, I
pocket?
don't. Unfortunately, I don't. Um, no, there's no magic fix, and I'm seeing the risk appetite for operators going up. 5, 6 years ago, when we were structuring deals and we were working with clients, most of them wanted to be relatively conservative with their tax positions. They saw some endpoint, they saw some federal fix. You know, there was light at the end of the tunnel. So they were willing to be conservative. So they didn't have any tax problems. They didn't want to get phone calls from the IRS. They didn't want to have an audit. Um, but that hasn't happened. Like they don't see the light at the end of the tunnel. So now they're having trouble raising capital. They don't see a tax fix coming, and therefore their risk appetite is going up. So we see many more service providers marketing, much more aggressive tax positions or financing structures than we saw several years ago, and that's a concern. There's a fine line between working with an advisor who is creative and offering solutions and offering out of the box thinking while also explaining the risks to the business owner. There's, on the other end of the spectrum, working with service providers that basically you're telling clients that there's a magic 280 fix and there's no risk. It's like, that's just unreasonable. And I'm spending more time of my day pushing back and educating clients about the risks of those positions.
For folks who are just entering the space, getting into the industry, who may have had accountants from past businesses, uh, would you say to them that they should really be looking at someone like yourself, like a CohnReznick, who actually has cannabis experience, or can they get by with, their long-time accountant they've known forever?
Well, I would recommend me, but
Well, who wouldn't?
but all joking aside, yes, you really want to work with somebody both on the accounting side and the legal side who understands the accounting and tax issues that are specific to the industry, because it is very different. And the other challenge is you want to work with accountants and service providers who both understand the intricacies of 280E and mergers and acquisitions and due diligence and structuring of transactions, which means there's a relatively small population of firms across the country that are actually doing that kind of work. It's not just us. As much as I think we might be the best, we have some good competitors or good people in the market. But I routinely get referrals from operators who, they had a non-cannabis business, they got a license somewhere, and 2 years down the road, they realized that the CPA they're working with, who may have been great for their other businesses, doesn't know the first thing about what they're doing in the industry, and that can be dangerous.
Well, and one thing we've been seeing a lot in the news recently, I'd say in the past year or so, particularly with the big boys, but I'm sure it can also happen with the smaller guy, is along consolidation and people come together, and all of a sudden they're realizing they got a lot of tax issues. And it's like, whoa, I owe $500,000 in taxes. How are these companies getting into that trouble, and how do they avoid it going forward?
$500,000 would be a good problem for most people in the industry.
True.
In my view, a lot of operators just get out over their skis. Like I said at the beginning, people were really optimistic that there was going to be some federal change coming. Now, 280 is 280 applies to Schedule 1 narcotics. So if cannabis were rescheduled or descheduled, or there was another legislative fix, 280E would automatically go away. There could also be a standalone legislative fix specific for 280E. Like you could have a carve out for medical states or regular, operators in licensed states. But I don't see that happening in the short term. And I'm sorry, what was the rest of the question?
I'm not sure.
So excited. I was talking about.
I got so thrilled there. No, I think a big part that people have been forgetting recently is the compliance side, and really preparing themselves for audits and being ready to actually have to deal with paying their taxes.
Yeah. Okay. So sorry, I forgot where I was headed with the
okay.
No, I think people have got out over their skis because they thought that there was going to be some fix. So they kind of pushed the tax liability to the back burner. They figured, they would continue to do acquisitions. They would continue to get licenses in new states. It would be a big drag on their cash flow. But, don't worry. There's going to be some fix. 280 is going to go away. That's going to dramatically improve our cash flow. And then all of these acquisitions will be worth it. Well, there hasn't been a fix. And a lot of operators have acquired a lot of other operators, and very few of them are actually cash flow positive. And now they don't have any reasonable way to pay down that tax liability in the short term. So I think it's kind of a basic budgeting problem. They're anticipating 280 being fixed. They're anticipating that having a positive impact on the cash flow. It didn't. And now I think we're going to see operators across the country divesting of licenses that they've acquired over the past 3 or 4 years to generate cash flow.
Now, for all our viewers who are watching the crawl at the bottom, I just want to remember to bring to your attention the promo code that you see, COHN23. That'll get you a free 3-day pass and 20% off the full conference program. So please take advantage of it often. I do know that you have been doing some work with folks in New York. You do have some license holders you're dealing with up there. What are you hearing in New York? Obviously, we are kind of a New York centric and happy kind of crowd. I hear a lot of issues with real estate.
Yes. That's not unique necessarily to New York. One of the biggest challenges in every rollout has been securing real estate. So actually the way that we as a firm initially got into the space, because CohnReznick has a large real estate practice, we were kind of drug into the space because we had real estate clients who started investing in cannabis assets. And then there was a question about whether or not we could help with that. And, that was 6-7 years ago. One thing led to another. We decided if we're going to work with the landlords, then, it's not a bridge too far to start working with actual operators. And we've been doing that for the past 7 years. But real estate is tough. Commercial real estate as a sector is going to have some trouble over the next 5 or 6 years because of the decrease in office tenants and the hollowing out of urban cores and downtowns across the country post-COVID. So on one hand, you have commercial real estate concerns and the larger economy. And then you have operators attempting to secure real estate in normally a very limited area. Like there's only so many parcels of real estate within any state, New York's no exception, that actually are suitable for cultivation or retail. So you have a lot of new operators going after a limited number of retail spaces. And then New York also has a large illicit market that continues to take up space. Now, the good news is, if structured correctly, if you can structure deals with, first, by finding a group of investors who are interested in the real estate themselves, acquiring the real estate, that looks like a traditional real estate investment entity, and then you go out and pair that with the operating entity. So there can be creative ways to satisfy the needs of two different investor groups. One investor group that is used to real estate investment, that wants to have the security of the tangible property, and the other investor group that actually wants to be in the operating entity. So, but you're right, actually finding the real estate and then financing the build out is tough. Retail stores, build out maybe as low as $500,000. A real cultivation facility or processing facility with extraction equipment and everything else, that's a multi-million-dollar endeavor. And financing is tight right now. So people need to spend, I would probably recommend that any operator take their budget for their build out and add another 25% to that minimum, just so that you do not get 75% of the way through your build out and then run out of cash.
Okay. Not to call you a Debbie Downer. However, what is like a happy piece of advice that you can give to our folks, or where they should be looking for? We know 280E is not an option. Where can they be trying to find tax breaks or trying to help build their business? Are there R&D credits, or where can folks go to try and get some relief in this industry?
Sure. So the feds are not a big help right now. So let's just go ahead and take that off the table. We see increase in IRS enforcement activity. We see increases in Treasury audits for cash reporting and bank reporting. So kind of put the feds aside, because there's only so much we can control. At the state level, we're seeing a lot of positive activity. We're seeing more and more states decouple from 280E. So if we back up a little bit, 280E basically says you cannot take any deductions for anything that is not cost of goods sold related. The starting point for most states in calculating taxable income is the federal taxable income. So the states have to take proactive measures to decouple from 280E, allowing the taxpayer to add back all those non-deductible expenses. More and more states are doing that. New York's done that, so that's a net positive. We're seeing new states that are coming on, like Maryland. I believe Maryland's and everything's still in flux, but my expectation is that when Maryland comes online for adult use on July 1, the excise tax is going to be 9% retail tax. That's much better than what we've seen in states like California, where you have multi-tiers of cultivation, processing, and then retail taxes. So I think the states are getting smarter. Like, they want their programs to be successful. They want a robust working market. So we are seeing reductions in excise taxes. We're seeing decoupling from 280E, and some states are being creative. Like, I think cannabis, from a state policy standpoint, should be viewed as an economic driver. Like, there are a lot of people working in the industry. So I expect there to be much more lobbying activity at the state level for state employment tax credits, state research and development tax credits. We think that there are opportunities that some operators are leaving on the table state by state. Like, is cultivation really agriculture? Should that qualify for an agricultural tax incentive in a given state, or is it manufacturing? Some states, depending on the way the regulations will work, cultivation may be treated as a manufacturing activity in one state, but an agricultural activity in another. And then you'd have to look to see if that individual state has any incentives, property tax abatements, or income tax credits that might qualify for that. Because keep in mind, states are trying to incentivize employment. They're trying to rebuild a manufacturing base. They're trying to keep farms in business. So I would look at agricultural credits, manufacturing, and employment incentives.
So what if you're an operator in multiple states and have to keep all these different states in your head and different regs? what's your advice for folks there? I guess hiring you would be helpful.
Yes. Realistically, you can't do it all. Like
Right.
whether or not it's CohnReznick or another firm, you can't do everything. And a lot of operators, it's been the green rush up until recently. So it's been a race to get real estate. It's been a race to get licenses. It's been a race to expand their market share, and the back office function. The basic accounting, the basic tax functions have been playing catch up, and it's a really complicated industry. We have one structure for federal taxation. You have separate income tax structures for states. Then you have the indirect taxes, your excise taxes, your property taxes. It's not realistic to think that you can administer all of that stuff yourself for most operators.
So, and I hate to keep going. I mean, I keep going around to just hire you. However, what should people be looking for when they are trying to decide, all right, I'm not going to go with my Uncle Joe, my old CPA, and I want to start looking for someone? How do you know whether or not they're the right fit for your company?
That's a good question. I think you need to find somebody that's honest with you and is willing to tell you no. We've seen a lot of operators. They normally come to us after they've been through an IRS audit or after they've been through a state audit or they've had problems with their excise tax administration, where, as I said, operators are getting more and more risk tolerant because they're having financing problems. They don't see a short-term political fix or legislative fix. So they're willing to try things. You need to be working with somebody who is willing to tell you, no, that doesn't work. Like, I understand you saw it at a webinar. I understand you may have got an email about it today. I understand you heard about it at a conference or somebody on the golf course told you that everybody else is doing it. But a good advisor is going to be the one that explains why that doesn't work, gives you other options. And instead of just saying no, like when somebody comes to me and says, hey, can I do this to avoid 280? No, you can't. But let's talk about what you can do. We can help you budget appropriately. We can help you with cash flow management so that come March or April, when that tax bill is due, you have the cash set aside. Like, so somebody that is honest, says no, knows what they're talking about, and then helps you address the problem, maybe in a different way, not by telling you there's a tax fix, but by helping you restructure your business or cash flow manage or just budget. That's the kind of person you want to be working with.
Now, a lot of businesses in this space, and typically I would say probably the smaller ones, may just be relying on a bookkeeper, or QuickBooks is what they're trying to keep their files on. Is that enough for someone?
Well, first, a good bookkeeper or a good internal accountant is absolutely critical. So the operators have to have good records. They have to be able to give the CPA firms good information for us to give them good advice. If you give me bad data, it's very difficult for me to give you good advice. So yes, got to have that bookkeeper. That's probably not the end of the story. We still see a lot of operators running QuickBooks, maintaining inventory with some kind of complicated Excel schedule. There are more software packages out there now. It gets better every year, but it's still a challenge for the industry. You would be shocked at how many people we see that are generating millions and millions and millions of dollars in revenue running on very, very basic programs.
Well, I see that we are quickly approaching 4:20, Michael, which means our time is up. Any last minute words of advice?
Well, I don't mean to be overly negative, but the news in the industry has been, challenging for the past several months. I think it will be for probably the rest of the year. But on the good side, hey, this is still an industry that's selling a product that people want. Like, I am still very optimistic long term about the industry. I think what we're going to see in New York's going to have its hiccups, but it's a massive population. It's a massive market. It's going to get figured out. It's just going to take some time. I'm really excited about what happens in Maryland in July. There are a lot of good things happening at the state by state level. I talked to an operator just yesterday in another Northeast state who is having no trouble raising money for a smaller cultivation facility. So even though you hear all this negative news at the national level, which is true, don't forget that there are strong states, there are new states coming online. There's still opportunity. And again, like, you're selling a product people want. Like, it's going to be okay. It's just going to be kind of bumpy for a while.
All right. Well, thank you so much, Michael. And if you want to hear more from Glass Half Full Michael Harlow, join us at the Javits Center in June, and enjoy the rest of your day in year 420.
Thank you very much.